Welcome to the three-part video series of the Money Workshop. This is video number 3, how to use the profits in your business and build your personal wealth. A big problem that a lot of people do, whether they're creative or not, is not to use their profits to build their personal wealth. I see this tragedy happening across the business world on a daily basis, and it breaks my heart. When people start making more money in their business, they start thinking, oh, I need to increase my lifestyle. I need to go and buy a new car. I need to go on a holiday. I need to do all these things to improve my standard of living. And of course, you're working hard, you're enjoying your business, you want to enjoy your life at the same time. I agree. But at some point, you need to work out what I call like a balancing act. So my philosophy is this: when you start building more profits in your business, we gotta split it in the pie. We gotta split the pie of my profits, of my increased profits in my business. The first thing I would do is, yes, you need a reward. Okay? So you will need to be rewarded for that hard work that you're doing. Because if you don't get rewarded, as we know, if you're a parent, if you don't reward your kids, they're not going to go and do their maths test, do they? So you need a reward. I would take a bit of money of my profits, maybe 10%, and go, I like a new car, or I want to go and buy new clothes, or I want to go on a holiday, but I'm going to do it wisely. I'm going to take some of this chunk of the profits, no more than 10, 15% if you want to stretch it, and play with that in my business. The second thing you need to look at with your profits is you got to put aside the tax. We all hate tax, don't we? That money will never come back to you. You cannot claim it. It goes to the government and you will never see it again. So I would put aside between 25, depending on which country you are in, 25 to 30% of my profit into my tax account. So we're going to put that aside. That is not your money. The second thing I would look at to use my profits to, if you have your own mortgage, or if you don't have a mortgage, basically you got your own home and you got a mortgage, the first thing I would do is pay that down. Pay my home mortgage down. Take a big chunk of my profits and pay my mortgage down. I would take big lump sums and pay it down. As a small business owner, you are running a risk running your business. You don't want to also have a personal risk. You need to pay your non-deductible debt down. If you're in the US, you can claim it, but if you're in Australia, you can't claim your own home mortgage and reduce your personal tax on that. So the first thing to do is reduce that mortgage. The second thing I would do is split some money towards putting some money aside, 10 to 20% of my business profits into the profit account in the business, profit bank account, and leave it there. And the reason I would say leave that money there is because you never know when things don't turn out in the business. You might have a lean year, you might have a good year. You want to have that money as backup for you. So I would call that business backup money. And what some people do is basically you could open a bank account and you call it business profit bank account backup money, and put that money in that account in case something happens in the business and you need to pay big bills, or you need to buy new equipment, or something major that you need to do, or you want to increase your business and you need to employ someone, and you need at least 2 to 3 months for them to get trained to be able to generate income for you. So that could be your business backup capital that you could have in another bank account. The other one I would look at is, let's start putting some aside of my profits into investments. And some people might say, Susan, why can't I just put most of my money into my mortgage and pay that down? And I say, because your mortgage is a 30-year, 20, 25-year mortgage. It will keep going. You want to split that money into various places where you can start investing. In Australia, my recommendation is put some money into your superannuation fund. In America, 401k. So put some money in super, or you could take some money out from your business and buy an investment property. You could buy shares. But the most tax effective structure, I would say, if you want to take some money out and invest, I would say invest your money into your super fund to begin with. Super or 401k in the USA. So that's what I would looking at. I made some profits in my business, taking a wage from my company, any extra money coming in, I am not frittering it away. I am not using all my money that is in my business for my personal use. I'm using those profits to start building my personal wealth, pay down my own home mortgage, put some money towards my retirement 401k or superannuation fund, and in Australia that is tax deductible as well. Put some money, put the tax aside. That's the first thing I would do in that tax account we mentioned in the first video. And the other one is, don't forget getting rewarded. A holiday, a nice wardrobe, or you could lease a car. But my recommendation is, the moment more profits start coming into your business, get professional tax and financial advice. Thank you for listening for my 3-part video series of the Money Workshop. See you next time.